All right. Hey, everyone. Thanks for joining me here today. Hold on. Let me, actually, I don't need to show this screen here. I'll just show this one. All right. Welcome to my stream. If you're new, let me explain to you how this works real quick. All right. So, first thing, I scheduled my stream for like 30 minutes from now, but I was able to start it a little earlier, my usual time. So, I'm just going to go with it here. Here's what we do. So first thing, I run through the economic calendar so that we're aware of what events are coming out this week so we could be better prepared, especially if we day trade. Second, we're going to run through some charts. We're going to take a look at Bitcoin, gold, oil, Nasdaq, things like that. And if you have any charts that you would like to see, you can just let me know in the chat and I'd be happy to take a look at your chart. And basically what we're looking for are key levels so that you can prepare yourself for the week for a number of scenarios that can unfold, especially in light of all the economic news that we have. All right, so with that said, let's get started with the economic news. Now we have what is it? Today, I believe it's today. We have Bank of Australia. They have their rate announcement. It's just worth mentioning if you trade Forex, might move things around a bit, but usually other central banks don't really move the dollar, right? Tomorrow, which is Tuesday, we're in the third week of August, by the way, I think, right? Is this the third week? No, we're into the second week. We have CPI tomorrow, which is Tuesday. That's at 8:30 a.m. Eastern time. CPI is a very important number. It's just as important as like non-farm payrolls and stuff like that, especially in light of the economic situation that we're in right now in this country. All these data points are going to be extremely sensitive, especially since the Fed has been making their decisions on highly inaccurate information, right? So now all eyes are on the FOMC. He's expected to cut, but by how much, right? So these numbers like CPI can affect the perception of the market as far as people betting on, well, how much is he going to cut? Is the CPI come out really, is it ticking higher? Are we seeing more inflation? That can affect the probability of him cutting 50 basis points, for example, right? So important number. And it can move markets dramatically. That's my point. We can't sit here and try to figure out how he's going to cut rates and by how much. That's all just guess. That's all guessing. Unless you know him or someone that knows him or you're an insider, that's the only way you're going to know for sure. We could sit here all day long and play with ourselves, but it's meaningless, right? So be aware of the number, see how the market reacts. That's at 8:30 a.m. tomorrow. Then on Wednesday, I don't believe we have anything worth mentioning. Thursday, we have the PPI, which is the Producer Price Index, not as important as the CPI. I believe that's also an 8:30 a.m. number, Eastern Time, 8:30 a.m. Eastern Time. And then on Friday, there was a number, and now I can't remember what the number was. There was something on Friday. The PPI was on Thursday. I forget. Retail sales. Retail sales is on Friday. I believe that's an 8:30 number. It could be a 10 a.m. number. Double check on that. But retail sales is not as important as the others. But if there are any surprises in these numbers, you can see a dramatic effect. It can set the tone for the day, right? And that could be very important, especially if you trade, if you day trade, if you trade options, you need to get a sense from that, right? So that's pretty much the economic calendar. Everything else on the calendar, there's a lot more stuff on the calendar, but in my opinion, it's just not worth mentioning, all right? Because it's not really heavy market moving information. Okay, next, let's move on to the charts, okay? So anyway, yeah, I just a few words about the environment and what's been going on. I mean, I find this environment, hey, good to see you. Glad someone's watching. I find this environment to be very tough as far as day trades go, especially like Nasdaq. The noise is just very hard to navigate through. I know, of course, after the fact, it looks easy, but while it's transpiring, the noise, I've been having a hard time with it. But that's not shouldn't be too surprising for the month of August, which is one of the hardest months, right? As far as volume goes, it's one of the lowest volume months, right? In fact, what we're in the second week of August. So next week, in my opinion, is going to be the worst week to trade for the year. So it's important to understand that money is seasonal. I've mentioned this before. Money is seasonal. So what that means is volume, right, which is basically money flowing in and out of the market, right? People placing trades, which is money. It's seasonal, just like we have, seasons during the year, just like we have summer, just like we have autumn, just like we have winter. Money moves in a similar way, right? But money pretty much only has two seasons. It's like high volume season or regular business season, and then off season, right? There's on season and there's off season, kind of like the NFL. So right now we're at the worst of the off season. It's the slowest time of the year. This is when everyone goes away, right? Especially in this country. I know in Europe, they take like 3 months off for a holiday. Like holiday is the entire summer. But here in this country, holiday is like a week, right? But everyone takes that week this month. So that's typical, right? So how bad or how slow it gets is always going to be a variant, right? It's always going to be a variable. You don't know what that's going to be. Just like when you're forecasting the weather, right? There's a rainy season, but you don't know exactly how much it's going to rain. You just know that generally this time of year, there's a higher chance of it raining, right? Other times of the year, there's a higher chance of it not raining, for example. So it works similar to that. So knowing this, you should know, especially as a day trader, to do less, take time off, do paper trade, do things like that. Don't push it because it's very easy to lose money. Things will get better usually around November. That's when we get back to regular volume. Now, it's not a light switch. It's not like, okay, today we have bad volume and then tomorrow is, it's November 1st, we're going to have good volume. It's not like that. It's gradual, right? So what we're going toward now is the gradual bottom, meaning volume is going to be less and less and less going into next week. And usually next week is the bottom. It's like the worst of the worst, right? And then from there, volume starts to gradually pick up. But it takes until November, usually around there, to get back to what I call normal day trade volume, where you start to get momentum again and you get follow through, meaning you take a trade and it goes to your profit objective, like a 10 or 15 or 20 point profit objective on the Nasdaq, like instantly, like in less than a minute, it's there. Right now, to try to make 20 points on the Nasdaq, especially with my style, it's like it takes forever, and you have to sit through a lot of noise and a lot of fake outs. That's a lack of volume. All right. So anyway, okay. So yeah. You know what? I scheduled the YouTube. I scheduled this thing for 3:30 because I was running behind, and I let me just give myself some extra time. But then I was able to catch up. So that's why I'm like, all right, let me just, I was going to wait and be like, I'll just do it at 3:30 because I scheduled it. But I'm like, you know what? Let me just do it so I can finish early, whatever, a regular time and all that. Okay. So anyway, now I don't know about you guys, but I mean, generally this time of year is slow for a lot of businesses. I mean, in terms of like my business, with like the Trade Scanner Pro and stuff, it's horrendous. I get like nothing. It's like completely nothing. It's like there's nothing out there. Now again, I don't produce a lot of videos. I don't, I only stream once a week now, but I've been having a really like slow time. The summer's been pretty bad for me business wise. So, I don't know, it's not very encouraging. And I've been noticing on YouTube dozens and dozens and dozens and dozens of just traders coming out, right? All kinds, Nasdaq, whatever, right? Prop traders, stock traders, options traders. I've been seeing lots of videos polluting my feed, and I'm like, let me watch. I'm gonna spend some time, and I'm gonna watch a whole bunch of these videos. It's unbelievable. There's no shortage of these videos. right? Everyone, and the funny part about the whole thing is everyone makes money. All these people claim to make money. They're all making, some of them are saying they're making $65,000 a day. I'm like, come on, man. This is fake. There's no way. Some people don't even bother showing any type of proof. They just say it. I made 65,000. Hey, I made $1 billion today, everyone. $1 billion. Do you believe me? I'm not going to show you any proof of it, but trust me, I made $1 billion. That's why I'm here streaming, because I made $1 billion and I got nothing else better to do, right? Anyway, so I noticed there's just tons and tons of that coming out because I guess they got nothing else better to do. And the material, the content, I can understand why people watch them. And they have all these videos, all these things that I watched, most of these people have like 50,000 subscribers, 25,000 subscribers. Their videos get great views and all this stuff, right? And I'm like, man, it's not the content, because the content, you could chat GPT it and get the same content. In fact, that's probably what they're doing for their scripts. They're a girl, they're attractive, they have like a bubbly personality or something like that, right? That's what's selling it, because it's got to be, because the content is useless. Like, its content has absolutely no value. So anyway, hope your travels are, oh, Alex from Romania. Okay, no problem. Thanks for stopping by and saying hello. From Romania. Where are you, Alex? I wonder what country he's in. So that's cool. See, that's what I mean. He's one of these European guys. And, they spend like the entire summer holiday. That's nice. I'd like to do that. So I'd go back to Spain. And of course, I'd have to visit Romania. But if Alex is traveling, then I can't go visit Romania, because I have to visit Romania when Alex is there. Otherwise, it's pointless. Oh, he's in the Alps. How nice. Man, you go to the mountains when it gets hot. Right. I know the Italians do that too. They go to the mountains. That's cool, because it's cooler there. Right? The Alps. How nice. All right. It's got to be nice up there. I prefer more of like an island type of thing. Like oh, 2 weeks. Okay. Oh, not 2 months? What kind of European are you? Don't you have, I thought every European has like 2 months off. I'd visit the Spanish islands, right? Like, the Spanish islands. That's what I'd like to check those out. Those are a good summer spot, I hear. Very few honest kind of, right. It's amazing though, It's amazing, like, how and it's not even they're scamming. They're not even scamming. This is why it's hard to criticize them, because what they're doing is technically producing content, right? And they're smiling and they're happy and positive vibes and blah blah blah, and we're cool and I'm a girl and I'm hot and all that kind of stuff, right? And what they're actually doing isn't scamming. They're sharing content, right? But the problem is the people that are following it, they say, oh, this person looks like me, so they trust them, right? Hey, this person looks like me, I trust them automatically. And the content itself is very generic, and it doesn't help. The worst part about the whole thing is they imply that this is generally easy. The message is, hey, if I can do it, so can you. That's the message. Meanwhile, the stuff that they're peddling is just completely random stuff. Like, oh, I'm going to show you support and resistance levels. Oh no, it's called supply zone and demand zone. I'm sorry, it's the support and resistance. That's so old. That's so year 2000. These days, it's called supply and demand zones, right? And or ICT nonsense. They start up with that. I know I'm ranting for a while here. I'll get into the charts here, but anyway, just some observations. I've been noticing it. Like, there's so many of these videos, man. It's like, I just want to start making videos reacting to them. I'd probably do better with my YouTube channel if I was making videos reacting to these videos. And there's very few people, like I ask myself, is there anyone actually worth watching? And there's like one guy or maybe like two guys that I'd be like, oh, okay. And the one guy that I like to watch, he doesn't even show charts or anything like that. He actually just tells stories, because he's an actual quant trader he actually worked at a hedge fund, and he doesn't even, he's like retired and he just talks about his quant stories. That's what he does. And he makes money with his YouTube channel. He doesn't trade. So anyway, yeah. All right. So yeah, YouTube, TikTok, all these places, they're all just trying to make money. They're all just trying to start up, they want to have a passive income, because if you can get the YouTube channel going, you could make, if it really grows, you could make 50,000 a month on the YouTube channel, you know? So I'll tell you a quick story. It just reminds me of something. Years ago, this technique is nothing new. Years and years ago, like we're talking like 2012, there was a guy. He's still in business today, right? Simpler Trading is the name of his company now, but he was called something else back then. He used to have a chat room, right? Back then, people had chat rooms, and it was a subscription-based chat room to trade futures, right? So I only, yeah, I hear you, A. I mean, so this guy had this futures chat room, and it was like the place to be. Everyone wanted to be in this chat room, and he had about 1,000 subscribers in that chat room. Right now, to be fair, a lot of them are probably on free trial. Now, in this chat room, he would trade like the Nasdaq, or he would trade the S&P futures, but he would trade size, like 100 contracts, right? A trade, and you would watch him. The idea was to try to follow him. You would watch him make $10,000 literally in a few minutes, or lose like 5 grand, like in a few minutes, right? So he was throwing around these big numbers, and you'd be like, wow, it's amazing, right? Meanwhile, if you looked at his subscriber count, right, at the time, he had about 1,000 people. He was charging, the subscription rate for that chat room at the time was $1,000 a month. Okay, it was something like that. It was something ridiculous like that. $1,000, you were VIP, blah, 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 and you got to be in the chat room. Now, let's assume 90% of those people in that room were free trial people. Let's just say 100 people were paying the $1,000. Let's say that's 100 grand a month at minimum that this guy was pulling in from this chat room. So the throwing around random trades is just a cost of doing business, right? If he had a 50% win rate, and he wins 2-1, right? So he wins half his trades. Maybe he comes out maybe ahead. Maybe he comes out breaking even for the month. Maybe he comes out at a loss. Maybe he loses 20K for the month, right? On his trades, but he's still net $80,000 positive, right? That's so that's an old gimmick, man. People have been doing it forever, right? So they make money somewhere else, like with today's with training programs and blah, 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 and they don't make money from the markets. That's how it is. That's how this guy was doing it. He made a lot of money doing that. Since there are a bunch, I can get a feel. Okay, yeah, that's interesting. Yeah, so that is how this business works. So you're sitting there, you're all mesmerized by his big trades. Oh, it made 10 grand today. I want to do that too. Meanwhile, he made 100,000 the month before, because 100 people are paying him $1,000. Right? That guy is still in business, by the way. So, but he's nowhere near, like no one follows him anymore. In fact, he has, like I've seen him on YouTube. He's boring. He's really boring. So like no one watches him. And he's kind of like, he's a little older. He must be maybe in his 50s maybe or something. And he's too corporate. Like he has no personality. And so that's why a girl, a 22-year-old college dropout girl who looks cute, will run circles around him. Because who would you rather watch? I know who I'd rather watch. Anyway, my standards have gone really, these days my standards are pretty low. All right, I need to talk about charts. Enough of this nonsense. Let's talk about charts. I'm just, it's Monday. It's a hard day, not making any money. So I'm like in rant mode here. I've been ranting for 20 minutes. All right. If you find my rant interesting, I mean, A is the only one here watching me. Everyone else is like a bot. If you find my rant interesting, let me know. That could be useful information. Anyway, all right, Bitcoin. So 2 Sundays ago, right? Not the previous Sunday. See this arrow on my chart? I called that long, right? On TradingView. On my TradingView article, I said there was a long signal right here off the 113K. All right. That was the Sunday before. And look where we are now. All right. Yeah, it was a nice move. If anything, people should have known not to be short or whatever. And there was a nice move off of that. Again, how do I know that? Like, what prompted me to call that along? Well, first, we had the support. Second, you have the wave count situation. We never overlapped wave one, which is the 108K area. So if we held and we formed the green candle, which these are daily candles, right? Then most likely this thing is going to squeeze its way higher. I just don't know how long it will take. So anyway, since then we tested as high as what, 122 overnight. So that's a nice move, right? And the reward risk was very attractive for that trade. I don't know if anyone took it, but I shared that one on TradingView. You can go back and watch it. Now, you can see the illustration on my chart. When I wrote my article yesterday, there wasn't really much to change on this chart because I just drew a box around this area here, right? This area right here, because it's a consolidation where we're likely to see what's happening now. And that's exactly what I wrote about. I said we need to break 120 and close decisively above. Well, we broke the 120, but is this a decisive close? I warned about this. I said we cannot see a pin bar. That's what we have right now. Now the candle is still open, but if we close like this, that's a fake out, right? So this is how you know. When people ask me, how do you know it's going to fake out? You don't. If you bought the 120 breakout and you're still in it, you're caught in a fake out. That's why you have to be very careful with those type of breakouts. Like, this is not something you hold on to. You have to take the loss. That's the best choice in my opinion, right? Now the short signal or the sell signal will come if we close like this pin bar and break the low of this candle. That would be the sell signal. We don't have it yet, but this is not a good sign for breakout traders, right? And I warned about this. I said to push up to 130, we need to close like that. We need to close above 120 with a strong candle, right? No pin bar. And we don't have that. Okay, we got the pin bar, which is a sign of a fake out. So I don't, in this situation, and that fake out has occurred in the midst of this consolidation, right? Typically, consolidations like this, when you retest the general area, they will act as a support or resistance, typically, right? So what's happening? The resistance, it broke through briefly, but the resistance is asserting itself. So how you trade this, how you navigate this is going to be very important, like as far as your time frames go. You know, if you're a 1 minute time frame trader or a 5 minute, you're going to handle this. You're not going to handle this the same way as you would if you swing trade or you work on the larger time frames, like a 4 hour, a 1 hour, or something like that. That the trade management will not be the same. Moves like this, right? Bullish and bearish. There's a lot of day trade opportunity in these type of situations, long and short. But when it comes to the bigger picture, there are much less opportunities. So you have to be sensitive to what's going on. Now, if you're an investor and you're watching this happen, hopefully you're in from a good price, right? And if you want to, now you have a few choices here. Do you want to let this thing play out a bit, give it a chance? Maybe it closes strong again or something. I don't know, right? Or maybe you want to see how the next candle plays out. Maybe the next candle gives us a bullish inside bar like this, right? Which would actually be a good sign if you could get a bullish inside bar tomorrow, right? Followed by a breakout like that. That would be Wednesday. Okay, that would be ideal if you can get that. Now remember, we have CPI tomorrow, and CPI is a powerful catalyst. It can move Bitcoin because it moves everything, right? So yeah, and Ethereum went nuts. I guess I don't even. I guess that had. I don't even know exactly why, but Ethereum went nuts, and Bitcoin and Ethereum were not exactly moving in tandem, right? So they're kind of doing their own thing, it seems, when it comes to the way that the charts generally look. We'll take a look at Ethereum here in a moment. But so that's Bitcoin. So right now, while I'm still generally bullish, right, and I still think there's a chance we can break 123 and test 130, this pin bar is a concern. And if it closes like this and it breaks today's low tomorrow, that is a sell signal. It's not necessarily a bearish signal. It's not, it's just a sell signal. You don't know how far it's going to go. It may pull back a tiny bit and then reverse higher. Again, CPI can have an effect on this. Okay, make sense? Yeah, I mean, it broke through. Now, the ICT people, have a name for this, right? Where basically it grabs the whatever they call it, and it's just, look, it's a pin bar. Okay, it's a pin bar. It tested, it probed, and it absorbed whatever, and it turned around. That's it. It's all you need to know. It doesn't have to be that complicated. I know people love complicated stuff. They like complexity, but you're not going to get that here. So anyway, on Ethereum. Oh, okay. Yeah, so we'll take a look at that. In fact, I guess we could jump over there right now. So you guys clear on Bitcoin? You understand where I'm going with this? So there's really not much to do. If you're not long, this is not a good place to buy. If you're waiting to get in, it depends on what time frame you're planning on getting in. Like, for example, if you're looking for a good investment price, we're a long ways from good investment prices, right? We're a long ways. We're probably not going to see good investment prices for months, because good investment prices are major support levels, right? And we're nowhere near any of them. So, I mean, your first one is going to be like 113. That's not even investment. That's a swing trade level. I'd say your first investment level is probably around 100K, somewhere around there. Okay. And if that breaks, then we're looking at 95, 90, 85, 80. I don't think we're going to test those levels, anytime soon. So there'd have to be a serious catalyst in the market to get this thing to break. And most likely, if this thing is breaking, most likely the Nasdaq is breaking too, right? Most likely, because this is like, this thing follows the Nasdaq more than anything else. Hey, Hussein, how are you? I think for Ethereum holders can defer taxes with some strategy using. Oh, that's interesting. Okay, I wasn't aware of that, but that makes sense. So A says here, I'll show you the little comment here. A says that people can defer taxes with some Ethereum treasuries. Okay, there's a lot of interesting stuff going on with that, and a lot of enthusiasm. But like I said, this is, and also when I wrote this in my TradingView article, we're in a wave 5. This is clearly a wave 5 of a 5, right? So if Bitcoin touches 130 or whatever in this process, or finds a peak earlier, or maybe it goes beyond 130, that's anyone's guess. But this is a wave 5. 5 waves can clearly be counted. And again, what I've been telling people is what that means is, the way you have to take that is that the market is vulnerable. What's this? Oh, I got Hussein's thing over here. The market is vulnerable. All right. And yeah. Hussein, you know what? I scheduled it for 3:30 and then I was able to do it earlier. Sorry about that. Because I was running behind and I'm like, I don't want to schedule it for like my regular time close to 3:00 and then start at 3:15, right? Or 3:20. So I figured I'll put it at 3:30 or whatever. So I'm sorry about that. But then I was able to start at my regular time. So I figured, all right, maybe YouTube will send out the notifications or something. So, well, I appreciate you following the schedule, Hussein, and at least you guys actually follow the schedule. I thought no one even followed it. So I figured, it won't matter. So I'm sorry, you guys. I'm sorry for faking you guys out. See, the market fakes you out, I fake you out, and you can't trust anyone. All right, but hey, you guys are here. Anyway, Hussein, I was ranting for 20 minutes anyway. So you haven't missed anything. I was just complaining for 20 minutes, right? And then I started talking about Bitcoin. A got to hear all of that. You want an extra 30 minutes of masculinity rants? I don't think you want that. I don't think you want that, A. Forget it. I'll have to make another channel for that or something. But anyway, yeah, I've been failing in that department too. So let's take a look at Ethereum. So we'll go to ETHUSD, right? We'll take a look at this one because Ethereum has certainly been catching people's attention. And let's go to a weekly chart. You guys are clear on Bitcoin though, right? So let me know if there's any questions like about Bitcoin. If you're not Sure. Really? Hey, A is a super, what do they call them? Uh, a super fan. You know what that means, A? That means if I come out with a product for like 2 grand, that means you're going to pay me $2,000. Like if I come out with like a training thing or some other kind of a t-shirt or something and I sell it for 2 grand, as my super fan, you're going to buy it. That's what that means. That means there's a high probability you're going to buy it. So, but I don't see, I only have one. Hussein, maybe. I don't know. Hussein comes around, he might buy it too. So anyway, that's what that means statistically. All right, so let's talk about Ethereum. Now look at this. So here's the thing with Ethereum. I know it's got everyone's attention, but right off the bat, right, here's the weekly time frame. Look at this structure right here. Let me point your eye. Let me just point that out to you. You know what I notice? I'm going on tangents all over the place. You want to know what I notice about all these these frauds who have all these channels that I've been watching? None of them live stream. None of them. None of them live stream. I wonder why. So anyway, I want to point this out. Okay, see this? That's one thing to pay attention to. That's typically a bearish sign right there. That type of inverted pennant formation, right? And look where we are. I mean, we're just above this resistance here. Have we made all-time highs yet? I don't think so, right? The all-time highs are up here. We're close, but this is like, so this is a highly vulnerable area, right? Just based on that alone, right? This is a highly vulnerable area on Ethereum. If you're long Ethereum and maybe you made some money back, you should probably, in my opinion, again, I can't give investment advice, but I believe it'd be a wise thing to do would be to unload risk, right? Reduce risk, not add or increase risk in such an area. That's one thing. Let me point out something else. So in terms of wave count, right? Short-term wave count. This is a wave 1 over here, right? Then this is a wave 2, very clear. This is wave 3, crystal clear. This is wave 4, very clear. Look at that. And this is wave 5, crystal clear. 5 waves can be counted. So that also underscores the vulnerability of this thing. So while everyone is playing with their, you know what, to this, and be rich, right, all that, if you're buying this now, you're asking for trouble, man. That's all I could say, right? You have 5 waves and you're at a pretty key resistance area. I wouldn't go near this thing long. If you're long and you want to hold on, okay, maybe you're in from a great price. It would be wise to take something off the table. Never hurts to take something off the table. I would also use the reference points that I would use to say, okay, the party's over is, for one, you break below the wave 4, right? You break this. That would be like first. That would be one confirmation. The other confirmation, besides maybe like a pin bar up here, that would be a pretty good one. That'd be a more aggressive one, is the overlap of wave 1. Actually, no. Hold on, no, we have 5 waves. That wave 4 rule is only, that wave 1 and wave 4, that's only between wave 1 and wave 4. So never mind, I just said that, right? Overlapping is only for that. So pretty much you're looking for a break of the support. If it breaks, I wouldn't go near this thing. Like, for example, how this information can be useful to you is if you see a retest of this area, which is what? 34.21. A lot of clowns on Twitter and a lot of clowns, everywhere are going to be like, buy the pullback. You can be rich. Buy the pullback. And that pullback, this pullback is going to be a very tricky pullback to buy, okay, in this area. Because chances are, if these 5 waves are complete, chances are this support is going to break. It's not likely to hold. It can hold. Look, I could be wrong, but probability favors, based on the wave count, that this support would break. So I wouldn't go near this thing as far as a pullback. As far as swing trades go. Look, day trades are another story. I'm not talking about day trades. I'm showing a weekly chart here. Does that make sense, you guys? So Ethereum looks stellar, and I'm sure a lot of people, like I said, they're having a party in their pants, but that's usually when it looks its greatest, is usually when it's the worst, right? And you have all these guys, oh, Bitcoin, it's alt season, alt season. And I think it's the potential is limited. You know, this thing may go a little more vertical. Maybe it tests the all-time high before it turns. That's very possible because at this moment, there's no selling signal. There's no red candle. There's no pin bar. There's nothing on this time frame, right? You still have to wait the whole week, though. If you go to the daily, even there's nothing, right? There's nothing. There's really no reason to sell this thing now. What, you have some dojis in there, right? So maybe if you break those daily lows, that could be the start of the bearish corrective move, but it's going to take a while for that to unfold. Number one. Number two, you need a serious catalyst, right? Markets just don't pull back just to pull back, right? Just because, it's too high. It doesn't work like that, especially these markets. There needs to be a solid reason behind it. There has to be something behind it. Okay. Hussein, sure. I understand, Hussein. So for you, I'll give it to you for half price. So instead of $2,000, $1,000. All right. So anyway, I love you guys, man. All right. So you got that with Ethereum. So do you see that? Like, I hope that you can use this information and see what I'm doing with this analysis, because I'm not using, you can see I'm not using like oscillators and all that other stuff. All you really need on charts like this is the wave counts and trend lines, right? I mean, I don't have them just because I don't have them on here, but trend lines are a decent tool because they project things into the future and they give you a more of an anticipatory mindset compared to looking at an oscillator, which is like making decisions in the rearview mirror, kind of like the Federal Reserve, right? Because they trust government information. So anyway, makes sense. Let me know if you guys have questions on Ethereum. All right, I'm talking a lot today on stuff here. I'm just ranting a lot. So let's get into some other charts, shall we? Let's take a look at the Nasdaq. We need to cover some of the charts here because I put it in my title. And people will be mad if I don't show these other things. So let's see, what could we do? NQ1, right? So this is NASDAQ futures. It's the big contract. It doesn't matter if you use MNQ or NQ or QQQ. It doesn't matter. It's all going to be basically the same chart, right? So what's happening here? Now, again, we have all this news scheduled for this week, and this market is extremely sensitive. Remember, this market is basically driven by the Magnificent Seven, right? That's primarily what drives this market and the S&P. So when they have a problem, this thing is going to get dramatic, right? Most stocks aren't really doing a whole lot relative to the Magnificent Seven. Now let's see what's happening here. So we got a double top. This is a daily time frame on the Nasdaq. Today we have a little bit of a bearish day, right? But it's no big deal. It's just an inside bar. But look where the inside bar is occurring, right? So if we break this low tomorrow, and there's a good excuse, we have the CPI, that CPI number actually comes out pre-market. So that's going to be a pre-market level, right? There'll be an overnight high and low established, and then CPI comes out. So we have to see how this plays out tomorrow. But if this candle closes like around here today and we break the low of it, that's a sell signal. Or you can use Friday's low. That's a good reference point as well. You break that, then we have a double top in the Nasdaq, right? Now, just because we have a double top, does it mean we're going to sell off and blah, blah, blah? I mean, again, like Bitcoin, we need a good story behind that, right? There has to be something serious behind that. We've had many double tops previously that they sell off a little bit. So it's good for day trades and stuff, right? Or intraday trades. I mean, look at all these double tops everywhere, right? Everywhere. Look at this double top. Look at this one, right? Double top. Look at that. Double top. And they go nowhere. They produce nothing. So you can't get all caught up with that. You have to just recognize that, yes, there's a double top. Yes, there's a reversal that's in the process of developing, but you have to pay attention to you can't ignore the trend, right? You can simply draw a trend line, connect 2 points, and that is what's driving. Like that's the main thing that people are looking at, right? And until that trend line is cleared, we have to believe that the trend, even if there's a double top in our face, that the trend is still bullish, right? Until proven otherwise. Now, at some point, this is going to change. And when it changes, I suspect it's going to be dramatic. And we are coming into that time of year. You know, autumn is historically known for that kind of thing. And maybe we're setting up for that. I don't know, right? It's not wise to have those type of opinions because the market can do whatever it wants. Again, we have a lot of sensitive items coming up over the next few months. Like the next FOMC meeting is going to be a big one because Powell is expected to cut a minimum of 25 basis points, a minimum. So what if he cuts 50? What if he cuts 75? Because he's been making decisions on bad information and now he has to compensate for it. What if he does that? Does the market price that in, or will that be a surprise? I have a feeling the market priced that in. But anyway, there's a lot of opportunity here for this thing to get wild, right? So how is this information helpful to us? Well, for one, you should not be buying stocks here. If you're buying stocks here, man, I got a lot of stuff to sell you because you're a moron. If you're buying stocks here, you're a moron. There's just no other word for it. Because look, why would you do that? Right? Now you could say, well, you called me a moron all these other times and it worked. Okay. But eventually it's going to catch up to you. All right? Because in general, you want to buy pullbacks if you're going to do it. Right? You don't buy the high. At least, if anything, you buy the pullback, which, has been working very well. But when this one breaks, and I have no faith in this market, I think it's very vulnerable, especially since we can count wave fives all over the place. Everything is like just vulnerable. I mean, look, what is the wave count on this thing? Just curious on this structure, right? This is a daily, right? This was the Trump, this was the tariff stuff, right? And then we recovered off of it. So 1, 2, this is 3. You can call this a 4. Let's see. Well, 1, 2. Let's see. 1, 2, 3, 4, 5, 3. Yeah, 4. This is 4. Wave 4 in here. This is 5. It's a very, I mean, look how small these candles are. 2, 3, 4. I mean, there's a little overlap there, but that's subjective. And then 5. I can count 5 of 5 waves. I can count them. So UTXO, USD is not vulnerable at all. Yeah, not vulnerable at all, he says. I'm glad you bring up that. All right, so that's the Nasdaq. You guys see where I'm going with this? I don't even have to show you the S&P because it's going to be the same story. These things move in tandem, right? They move in tandem. So again, I would be very cautious when this thing pulls back. The first thing you're going to see everyone say is buy the pullback. I would be cautious with that first pullback if you're looking to invest, right? Let that thing break and wait for a better support level, at least a better support level on this thing. I mean, you know what? Let's look at the Qs for that, because the Qs would make more sense for stocks. It's the same chart, but I just want to, if I give you futures prices, it's like, the Qs are just, are more, I think, more relative as far as pricing goes. 536, where are we at? 577. So 536 would be an interesting area. That would be a support to consider, right? If you're looking to buy stocks, that would be one to consider based on the price action that's occurring there and all that stuff. Remember, just because there's a line there doesn't mean the line is going to hold. It can blow right through it. Just like back here. Remember this support level? I do. You know why? I was buying there. Okay. And it blew right through it. Thanks to that tariff uncertainty. Blew right through it. Okay. So remember, these levels, they are highly random, and it's important to wait for some type of confirmation before you take action there. That's the Nasdaq, and that's going to be the S&P as well. Let's take a look at the dollar index, since UTXO, the bot, has brought it up. So the dollar index, yes, excellent fundamentals. Just ask the ratings agencies. So let's see. I mean, look, the dollar index, this is the weekly, right? This is not a good looking chart, of course. It just produced another lower high a few weeks ago. Look at that. Let me make that nice and big so we can see. This structure is bearish. I mean, there's a resistance right there. And like if I was, for example, if this was a 1 minute chart and I was looking to do something with this, I would be looking for the short. I wouldn't be looking to buy this, that's for sure. I'd be looking for like a break of some kind of low and test of low and break of low, right? That's what I'd be looking for the structure to follow through. This structure is not bullish. So that implies lower rates, right? Maybe aggressively lower rates. That would be very bearish for the dollar. I mean, look at these massive bearish candles. Look at this. Look at that, right? Right now, I think our candle that's in control, our dominant candle is this, but you can just look at this entire move. This is the dominant move right here. I mean, you could summarize that into one candle, right? Even though it took a few extra weeks, took a number of weeks for that to play out, which means momentum is slowing compared to this week back here, right? It took a number of weeks for that move to develop from that high to that low, but you can consolidate that into one candle. And that's the move that's dominant right now. So lower rates are implied, which means, lower dollar. So I don't know what would have to change for the dollar. Like I'm very confused with this economic situation, to be honest. I just don't know how they're going to fix this or how this is going to be good for, regular people. I just don't know. I don't see it. So anyway, that's the dollar. Now the dollar, of course, the lower dollar in the eyes of the administration, they see that, from what I understand, they see that as a positive because it makes us more competitive, makes our businesses more competitive, right? But who actually gets screwed? The people, because our buying power, we go to the supermarket and we have to pay $20 for a gallon of milk. But Amazon will do great, right? Because we can compete with China. And I think that has a lot to do with, because China has their currency controls, right? That's historic. They've done that forever and everyone does business there. So we're trying to, I think that's the idea behind this. And I remember someone asked Chairman Powell about the dollar situation. You know what he said? I think it was at the conference, the FOMC conference. He said, basically, it's not his problem. It's the Treasury Department's problem. He said he's not concerned with the value of the dollar. It's the Treasury. It's Scott Bessent. It's his problem. So if Bessent is behind this, and he says yes to whatever, he's a yes man. You know that. Oh, just all arguments for a bearish dollar. Anyway, all right, let's move along here. So that was the dollar index. Let's take a quick look at gold because I put that in my title. Here's XAUUSD. This is gold. Gold has been very sluggish here. Look, this is a weekly chart of gold. Gold has been so bullish in general, but look at what's happening here. This type of consolidation. That is not a good look, to be honest with you. Yes, gold is bullish and we can argue and everyone's going to say, well, a weaker dollar and everything else, inflation, blah, blah, blah. I agree with all those things, but the chart is just not agreeing with it. So what do you do in this situation if you're involved with gold? Well, for one, if you're going to do anything with it, define the boundaries of the consolidation. I would say, well, you have a couple of boundaries here, but your more recent boundaries are this, right? I mean, from here, like there. Those are your boundaries. If you break the low, if gold breaks that low, watch for support levels, right? Here are your support levels. I doubt we're going to go this low, but let's just go here and here. Okay. Like for example, they're having that meeting with Putin and whatever. If that works out well, then there may be, less reason to be in gold, right? Because gold is usually for times of uncertainty, things like that. So that might be a bearish catalyst on gold. Maybe gold tests 31.54. Maybe gold tests this low. What is this? 29.69. That's around 3,000, right? So that would be a good level if it can hold there. Watch for those support levels, but with this money printing situation that we have and these aggressive rate cuts that we're expecting, I just don't see how gold is going to be bearish. I see gold can pull back, but I would not be shorting gold. Like I would not be bearish on gold because there's too many things in its favor, right? Fundamentals are just way too. Tariffs do not cover gold. What do you mean? Tariffs do not cover gold. I'm not sure what you mean exactly. Maybe you can explain that further. I'm just confused. But so that's the thing, right? Try not to get too tied up with the fundamental arguments, but you have to look at the broader view of them, right? And right now, it just looks like there's still a lot of fundamental reasons for gold to at least hold or break higher, right? With the Fed faced, they're going to be forced to cut rates and all that other kind of stuff. So, I would be watching this resistance level for a breakout, and I would not, otherwise just look for extreme buying opportunities. Like I said, if gold tests 31 or 3,000, those might be some nice buying opportunities if something like that occurs. Make sense? Said imports of gold. Oh, okay. Oh, that's interesting. I had no idea. You guys follow him more than I do. Okay, Hussein mentions this over here. So interesting. Yeah. So I would just keep an eye on those levels for gold. But gold is generally strong. And fundamentally, there's just a lot of things that are in gold's favor compared to not being in gold's favor. All right. So that's gold. Let's take a quick look at oil. Oil CL1. Okay. Oil's been all over the place. Right. Oil is very tricky. It's always been tricky. So the best thing with oil, I'd be careful with too much fundamental stuff. Any little thing can change this. Any little thing, any little geopolitical thing, anything comes out, oil spikes one way or the other, right? So it's very hard to have a fundamental opinion on oil. Look at the levels, right? You're at a support level right now. It's pulled back. You have this like failed low situation on oil. Is this really a trend? Do we really have a trend here? I don't think so, right? You had this move up to here, pull back, wave 4. This is actually overlapping wave 1. This is like a wave 1 overlap. But that rule is very subjective, especially when it comes to like things like sensitive things like oil. So it's like if this thing breaks higher from here, then it's like the overlap may not count. But so not getting too caught up in that, this would be a place to consider buying oil if this area can hold, right? Because I mean, is this really a trend for a day trader? That's a trend, but on the bigger picture, you're at a significant support level on oil. So if this thing closes like this, I think oil's closed right now, right? You break this high tomorrow. I mean, you're looking a reasonable retrace is up into here. What is that? 66. That's pretty reasonable for oil. So just something to keep in mind. Oil is also a inflationary thing, right? Oil could be a sign of inflation. Can you show more details off the wave 1 overlap? Sure. So when I do wave counts, right, there's a rule. Wave 1 cannot overlap wave 4. If they overlap, it cancels the impulse, which basically means you're not in a trend. Most likely you're in some type of consolidation. That's what it means. That means wave 5 is not likely or much less likely. So if we're going to count this structure right here as wave 1, right, of this impulse, then we're looking at the high of wave 1, which is here, right? And then we want to project. Actually, I'll just use a line, right? This is the high of wave 1 right here. And I mean, look, if this entire structure is wave 4, well, we've overlapped it. We touched it. We touched this price range. See that? We touched it. So theoretically, this means that oil is not in an impulse. It's not an impulse structure, which means wave 5 is less likely, right? Wave 5 is much less likely. This is more likely in a consolidation. That's what that tells us. Now, the thing is, though, this was never a nice clean-cut impulse to begin with. This thing's kind of a mess, right? A nice clean-cut impulse looks like Bitcoin, or looks like that Ethereum chart that I showed you earlier. That's a clean cut, very clear, crystal clear. This is not, right? This is like you started out okay, and then this mess. So that's why this is tricky. When it gets confusing like that, I then will put less weight on the wave count, because I want to see a clear cut, crystal clear wave count. It's got to be crystal clear. 4 waves or 5 waves have to be crystal clear. If there's any question, this could be this could be that, then forget it. Then don't go on the wave count, right? So that's what I do. So in this case, since you're overlapping wave 4 a little bit there, I mean, that would tell me, okay, be prepared for this thing not pushing this high. Maybe you get another failed high up here somewhere. Maybe this is a range. Maybe you're going to consolidate, right? And so what that means is, if you're looking for longs and you're going to try to take this long, be prepared to sell it in here somewhere. Use that as a profit objective, right? Because you have some resistance in there. Use that as your profit objective. If you want to be more aggressive, up here, right? Try to use, maybe you could use this, but there's no way to know if it gets back up here. If it gets up here, maybe you want to short oil, because you're looking for that resistance to stick. You wait for a confirmation. That would be the place to do it, since wave 5 is less likely, right? If this overlap is true. So if you just like Google impulse waves, an impulse is a 5-wave structure. It's basically a trend, right? I mean, an impulse looks typically like this. So you have wave 1. Actually, you know what? I'll draw it over here. I mean, there's so much information on this, right? You can Google it, and there's tons and tons of free stuff on this, right? So wave 1 typically looks like that, right? The initial wave. And this, you can have a bullish or bearish impulse. So wave 1, right? Wave 2 is usually some type of pullback, possibly the 382 retracement, 5.0. It can retrace 100%. It can go as low as 100%. Wave 3 is typically like that. It's never the shortest wave. Wave 4 typically pulls back to the 382 or 5.0, possibly 618, and should not overlap the top of wave 1, and that's wave 5. That's a typical impulse wave. And the opposite would be bearish, right? The bearish version of that. So this acts as a roadmap. It's a very helpful roadmap. And the most important waves that I'm always looking for, you guys know, because I talk about it every week, is I'm looking for wave 4 and I'm looking for wave 5, right? Because those are the most forecastable waves. Because you need 3 waves in place to get those, right? You need 3 waves in place to look for a wave 4. So wave 4 means there's a high probability of one more wave to go, which would be wave 5, could be bullish or bearish. And wave 5 means that a corrective structure is likely to follow, right? Like I'll show you an example here of Ethereum. I showed this earlier, maybe you weren't here. Ethereum on a weekly time frame, this is a clear-cut 5-wave structure, right? Clear-cut 5 waves, right? You can see them, right? This is wave 1. The first wave is wave 1. This is wave 2. Then you have the next impulse, wave 3, right? Then you have your little pullback, wave 4. And then you have this 5th wave. So like I was saying, that's crystal clear. So if 5 waves are complete, that means what's more likely, the probability of what's coming next on this weekly time frame is a corrective move. Now, I don't know how steep that move will be. I don't know how far it will pull back. But all I know is this is a vulnerable market, and I wouldn't want to be long, especially at these levels. Okay? I mean, within each wave, there are normally, right, these waves are fractal. So inside of each wave, you should be able to count a certain number of waves, right? So in impulse waves, like wave 1, wave 3, and wave 5, you should be able to count 5 waves inside of those waves. But don't get too caught up with those. Sometimes the counts could be really confusing. Don't get too caught up with that. That's why I look at the broader picture for your roadmap. Inside these corrective waves, typically, you should have 3 waves, right? Sometimes you can have a compound corrective wave, which is more than 3, but typically there's 3 waves, A, B, and C. They letter them. They can be very confusing. I don't like the corrective waves too much, but so you want to look for these impulses and look for wave 4 or wave 5 as a roadmap, and that's what I do. So, like for example, right now, if I see wave 5s everywhere, then I know like I don't want to be long. Like for day trades, look, that's another story. None of this really matters for day trades, but when it comes to swing trades or investing, it's very helpful. I like the count, so I know when the leg should be done. That's all. So I don't ask too much. Okay, right. Well, I mean, again, it just serves as a roadmap, and then you could use like retracements and stuff to kind of get an estimate of what kind of price points this thing can reach. You know, like for example, you can do a projection off of wave 1. This is all market proportions. You could do this, right? You can measure wave 1, project it from the bottom of wave 2, and a lot of times you'll get the full definition of your wave. Look where the 1618 comes in, right? This is very probable that this is where wave 5 will peak. Doesn't guarantee it, but that's a good inflection point, right? That's a good place to be looking for that type of behavior. So if anything, even if you don't take trades off of it, if anything, it's a good warning. It's a good heads up. You shouldn't be buying, right? You shouldn't be going long, especially aggressively, or you shouldn't be complacent at these levels. You know, you have these morons. I'm rich. I got Ethereum from 4,000 or whatever. It's gonna go to 8,000, right? Meanwhile, you just bought the top, moron. Right? So you have to pay attention to these things, and the wave counts are a really helpful tool when it comes to that. I mean, there's software out there that you can get that'll do all the counting for you. I've messed with it, but the problem with the software is it gets very complex and it gets very confusing because it counts every single wave, and then when waves change, it throws you off. Like so, I just think it's unnecessary. There's a number of them out there. If you like to have the wave counts drawn for you and all that stuff, and then they have alternate counts, and then it tries to put probabilities on. It gets very complicated, but they have to make it complicated, otherwise you wouldn't buy the software. All right. So anyway, all right. So that's those things. So good question there. Any stocks or anything you guys want to see? I've looked at the. Okay. Oh, okay. I'm not familiar with that one. But okay, I try to keep it real simple. I try to keep the analysis as simple as possible because when it gets too complicated, it's just pointless. So I covered all the markets, right? That I talked about in the title. Is there anything you guys want to see, like a stock or anything, or an altcoin, PP coin? I told you guys about the one coming out called what was it? Wall Street PP? No. There's one called Lil PP or Lil Pepe. It's actually in pre-sale. Lil PP. I actually researched it further. That coin, it's a meme coin, but it actually has it's a more anticipated coin because what it's trying to do is it's trying to make the whole meme coin process more efficient. I watch and see you talk about waves, so I'm glad. Oh, cool. You watch it after Litecoin. Okay, sure. I'll take a look at Litecoin. Hey, Kai, how are you? What is that? The DE10? What is that? What is that? The DAX? Let's see here. I short to Hussein. Do you not remember what I said to you a week ago? I remember you said you remember we talked about. All right, let's do Litecoin. Remember, Hussein? We talked about Litecoin, and you asked me about Litecoin, and I was giving you this bullish argument, and then you're like, "Yeah, I'm thinking of shorting it," and I was like, "Shorting it? All right." Remember I warned you? But okay, let's take a look. Let's take a look here. You shorted. Well, how early? Could you look at coin? Short-term trade went up nicely today. Okay. All right. So you guys come out with this now. I'm like an hour into this. I want to sign off. All right. I'll spend a few minutes doing this. I'll do these real quick. All right. So yeah, do you remember? Do you remember? I was warning you. Be careful with the short side. I said it was aggressive because you're fighting all this bullish stuff. But all right, but let's talk about it real quick because I don't know what price you got it from, but let's go to the weekly, right? Just like Ethereum, I mean, you can count 5 waves in here: 1, 2, 3, 4, 5. So there is a vulnerability, right? There is vulnerability, and you have resistance above you here. Okay, you have a resistance zone up here. It's a little wide, so I don't know how you want to deal with that if you have to take some pain. But see, the thing to do, Hussein, the better thing to have done was to wait for something like this. Wait for the confirmation, right? Like if this candle closes red, it's weekly, you'd have to wait the whole week. But look at the daily time frame. 118, okay, and we're at 121. All right, and this thing has been as high as 120. Ooh, yeah. So so maybe you tried to wait for some confirmation and you got caught in this noise. Very possible. This happens to me all the time on 1 minute time frames. So yeah, I look. You had the pin bar. Yeah, you had a bunch of bearish reasoning. Yep, aggressive. And well, look, the good news is it's failing, right? So this looks like a bearish formation to me. You just have to break this trend line right here. If you could break that and start closing below these daily lows, you should be okay. Of course, probably if Ethereum can lead the way for you. So I mean, it's aggressive, but I would give it a chance at least. The high was established up here, so you could use that as your reference point. If it breaks beyond that, there's some point you have to figure out where you're going to take your loss. But I would give it a chance. You also have a failed high situation. So I think when we spoke about this over previously, I think we were talking about this back here, right, with this bullish candle, and it was looking really bullish. So I was warning you about that. So I can see your reasoning, right, and I can see why you would do it, and it makes sense. So you have the failed high, you just need follow through. If you can get that follow through, I mean, you have that wave 5. If Ethereum pulls back, you may have to just be patient with this. It may be a decent, I think you have a chance. Okay. Hey, Izzy, Shiba. Oh man, I'm not going to be able to check all these. Why you guys wait till 4? Why do you guys wait until now, man? I was complaining for 20 minutes at the beginning of the stream. You could have been like, shut up with the complaints and show us some charts. All right. So could you please take a quick look at each one of the top? Yes, UTXO. I'll have to do that next time. Yeah, man, come on, you guys. All right, I'm gonna see what I can do here because you guys come here. I like to help you guys out. I like to do streams. I just this is like a hobby for me because I definitely don't get paid doing this. All right, so let's take a look back here. All right, I'm just going back here on the chat. Let's see what I can do here. Oh, and by the way, if I press like, subscribe, whatever, help me out with the channel at least. Not you guys. You guys do that all the time. But if you're new, do that. And try my Trade Scanner Pro maybe. I really don't encourage people to try it anymore because it's not intuitive. I'd rather you just not try it. Okay, DAX. Is that what that is? DE10? I guess that's what that is. All right, let's take a look at Kai over here. I'm guessing that's what that is. German, 10-year bond. Okay. So we're looking at German bonds here. Interesting. I never look at these, Kai. So I guess these are the bond futures. 10-year, these are German 10-year government bonds. Or maybe this is the spot market, I guess. So I would imagine that lower prices going to mean higher rates in Germany. I would imagine. But you guys use like the LIBOR or something like that? I forget what you guys even use over there. So you have a lower high over here. Okay, and you have this consolidation, a lower high. This is a lower high consolidation. And it looks like it's trying to break lower. You have a bunch of, we have a lot of economic news this week, dollar stuff, which may affect this thing, right? CPI tomorrow. stuff like that. I mean, look, you break this support, you got to watch that support right there, Kai. If you break that, then you're looking at rising rates. Until that breaks, though, you're looking at pretty much just more stagnation, more nothing, just a lot of nothing in there. Does that make sense? But generally, it looks bearish. Am I right as far as the relationship goes? Because again, I'm not familiar with the German bonds. I would imagine it works in a similar way. Okay, so yeah, I'd be watching for that support break, and that would imply rising rates in Germany, or maybe all of Europe. All right, which I guess that would be economically bearish for you guys. I don't know. Germany is like the powerhouse of Europe. What do you think Bitcoin will do tomorrow? CPI? I have no idea. No clue. It's going to do whatever it's going to do, right? So it'll be interesting to see. I just go back, watch the early part of the stream. I spent a good after I complained for about 20 minutes. I spent the next 20 minutes talking about Bitcoin. So just watch that, because it hints at the German and hence European. Oh yeah, okay. I figured I figured this would have a major effect on the European economy, because Germany is like the largest component, I believe, in the EU as far as economics go. So whatever happens with them, I mean, Germany is the euro, basically, right? So this thing breaks these supports. I would expect rising rates there too, and that means recessionary. Yeah, Anna, go back, watch, because I mean, look, just I can answer you in 2 seconds. Bitcoin has a pin bar developing, and if we close below that pin bar, today's pin bar, that's certainly a bearish sign. Now, I don't know how CPI is going to affect things, because I don't know how it's going to come out, but we'll have to see tomorrow. But right now, at this moment, Bitcoin looks like it's preparing to pull back. All right. Thanks, Kai, for pointing that out. Learned something new today. All right, let's see. Who else was? I saw there was Coin. We had Coin. What else was there? Coin. Where was he? Ricky. Is that Ricky with Coin? I'm just trying to go back here with my Ricky. You've been following me a long time, right? Your name looks familiar. I think you've been following me like forever. All right. Are you like in Australia or something? Let's take a look at Coin. So of course, Coin is going to follow Bitcoin, right? I think I know that name. Ricky's either from Australia or he's from London. He's a Londoner, dear. Or I could be wrong about both. Let's see, right? Yeah, for years. Okay, Australia or London, or Australia or UK. I think he's from one of those places. I'm in the UK. Okay. Oh dear, I knew it was somewhere with a British accent. Oh dear, Ricky. Let's take a look at Coin. My British accent. I'm not going to do a British accent the whole time. Don't worry. So, right now, again, look, this is going to follow Bitcoin, right? Generally. From South Africa. Oh dear. Oh, I can't do a South African. Forget it. I can't even do that one. I can't do that accent. I'd have to listen to that one for a while. But I can do a Londoner. All right. So anyway, from South Africa. Okay, I knew you were from like that whole. I knew there's something like that in those areas. Okay, I got you. All right. So back to your analysis here. So look, Coin. This is the daily time frame on Coin. I'm surprised Coin got beaten up like it has. So can I count 5 waves here? Let's see. One. This is 1, 2, 3, 4, 5. 1, 2, 3. 2. This is not this. Okay, 1, 2, 3, 4, 5. That's 3. That's 3. This is 4. 4 has okay. So this is like a fourth wave situation. Okay, like I can count 5 waves inside of that wave, which we got the corrective move, but this is a wave 4. Okay, so that means wave 5 is likely unless you overlap wave 1. Wave 1 is here. That's the top of wave 1 right there, right? You haven't overlapped it yet. So this is still a bullish impulse, in my humble opinion. It's trying to pop up a bit. Now, these type of pop-ups are very tricky to buy. These are very tricky. You know how I know? Because I do this with the Nasdaq every day and I lose money. So but I do this on a 1 minute chart, right? So this is a daily time frame. I got into a nice intraday buy swing at 113. Oh, okay. Oh, nice. On I guess you're talking about what are you talking about there, Anna? Which one? 113? Not sure which one you're talking about. So, sometimes hard for me to follow along here, follow along the chat. So here's what I want to say about this, Ricky. This wave 4, right? Wave 4s typically unfold in 3 waves. The first wave is the A wave. Oh, A wave can be 5 legs or 5 waves or 3 waves. In this case, this was 5 waves, right? The B wave, which is likely what this is here, is usually 3 waves, right? The B wave, an A, and a B, and a C. And the A and the C can be little mini 5-wave structures, right? The B wave. The B wave can even actually work its way up to there. And then you get the C wave, right? The C wave is typically 5 waves, and you would want that to complete around here somewhere. Now, you may not get that retracement. You may not get something that looks like this, right? You may not get this. This is what I'm talking about. You may not get that. Okay? This may happen sooner. This thing may pull back. My point is, if you're going to buy this, I don't know if you're interested in buying this. Oh, on Bitcoin. Oh, okay. Oh, nice. Oh, you bought the 113 and took. Okay. Is that from the swing trade that I called on TradingView? Is that where you got the idea from? Because yeah, I called that like the Sunday before I sent out that trade. Well, I'd be really happy if you made money off of that. So you guys see where I'm coming with this here? You have a little resistance right here. You tested that resistance. You see that? It rejected. And look how it's closed today. This thing's closed, right? Closed on looks like it closed on the low. Is that right? So I don't know what you're planning to do with this, Ricky. Let's see. Let me go earlier. You said something about it. Let me just go back. Let me go back to the chat here and see what Ricky said. All right. Where is it? I'm just going back. Looking at the chat here. Where is he? Ricky from South Africa. You have to do like a Musk accent. All right. Where is he? Where is he? All right. I can't find your chat, Ricky. You asked it much earlier, and I can't find it. Oh, here it is. Okay. Long from 307. Short-term trade. Went up nicely today. Okay. There we go. So, your own analysis. Okay. All right. That's cool. Well, it was the same as mine. If you go to my TradingView article that I wrote, not yesterday, but the Sunday before, I called the long at 113. So nice job. See that? You don't even need me. So 307. Wow, that's a nice trade. That's a nice trade there, Ricky. All right. So here's the thing. So you're dealing with this situation where it has some room, but you got this resistance. I mean, let's talk about profit objectives. You got this thing at 307, so you got it around here somewhere. Okay, so you got this pin bar situation. Man, that's a tricky trade right there. That's a tricky trade, Ricky. Tricky, Ricky. So you got that. Okay, and you got this little gap going on here. All right, so I don't know if I don't know how much you got, but maybe it'd be a good idea to take a little off the table. You know how I like to say that. You have, because you rejected this resistance. If you have the opportunity to take a little off, I don't know. If Coinbase continues its rally, I mean, obviously you got this jump because of Coinbase. I mean, because of Bitcoin. Okay. So, because Bitcoin had that gap, right? I'm long from 307, Bitcoin failing. Should I get out? Is this question. All right. Well, here's the thing. You have the CPI tomorrow. So the CPI can come out favorable and Bitcoin may rally back up or not. But Bitcoin does not look bullish at the moment with that pin bar, right? So you're looking at some weakness. It's a tough choice. I mean, again, I can't give you investment advice. If it was me, I would at least lock something in, right? I mean, you got a great price, but it would suck to watch it go all the way back to your price and then turn red. Because the thing is, you have a situation where this could be a lower high and a lower low is likely, right? At least a brief lower low. I'm not saying that this thing's a bearish trend, but a test of this level right here is likely, right? So if you have some money, this is not the best looking situation. Now, CPI can change all of this very quickly at 8:30 a.m. Eastern time tomorrow. Something good could come out and Bitcoin could be right back at 122, in which case this thing will be back to its high, right? So does that make sense? I mean, if you want to take it all off the table, then you're being more conservative, right? Taking the position off, taking your money would be the most conservative thing you can do. If you want to be more aggressive, maybe take half of your position off and then let half of it ride. Maybe put a stop at break even, but there's a good chance you may get broken even on it, right? But if this comes out your way and Bitcoin spikes tomorrow, I mean, you're looking at this area right here, right? Which is like the 50% area. This is a reasonable take profit area up in here. In fact, if I had taken that type of trade, I would have been measuring this area in this midpoint area. I'd be looking at this area in here for a profit as a profit objective. Doesn't mean it's going to go there, but that's where I would be considering it. Does that make sense? So, I mean, I don't know. Like, it's a tough call because this thing can do so many things, right? It's completely random, right? I mean, so I mean, what do you think, Ricky? Like, what are you more likely? Are you looking to be more conservative or are you looking to be more aggressive? And I'll be wrapping this up here in a few minutes. I think I covered I got everyone through everyone's quick requests here. Okay. Save room for your mindset. Tomorrow's news. Right. So, again, I don't know if you want to be conservative or aggressive. All right, what's going on over here? Okay. But that's how I would treat that because you got a great price. You had that nice pop. And the thing is, the concerning thing is this is a bearish pin bar and Bitcoin is also giving that bearish pin bar. So it's giving it back and there's no way to know how that CPI report's going to affect this thing tomorrow, right? If the CPI comes out hot, meaning inflationary, then I think that would be, I'm guessing that would be a negative for the market because that means it's going to be harder for the Fed. It's going to reduce the Fed's argument to cut rates, right? The market needs rate cuts. So that's where the CPI, like if it comes out hot, too much inflation, blah, 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 then that may cause the Fed to cut smaller or less aggressively or whatever, right? So the market may not like that. I don't know. If it comes out, the CPI is showing less, not so inflationary or the opposite, whatever, the market, I would think, would like that because now it strengthens the Fed's argument to cut and maybe cut more aggressively, right? Because as you know, the problem with cutting interest rates is inflation, right? That's a byproduct, and we have inflation. We have a lot of it. Although they don't like to say that we do, and he knows if he cuts the rates too aggressively, I mean, it looks like we're just going to have problems either way. I don't see any solution to this, But I'm not an economist. What do I know? All right, but does that make sense, Ricky? Like, I don't want to steer you the wrong way, and I don't want to like fake you out or anything like that. I'm just telling you like what I'm thinking, what I would do. I mean, I personally would take something off, lock in something, and then maybe let some ride. But it's a gamble. It's going to be a gamble because you're going to depend on that CPI coming out your way. And as we know, those reports are like coin flips, right? So, but if you look, here's one thing you can just think about. Taking profits never hurts anyone, right? You don't go broke taking profits. So just something to keep in mind. Yeah, if you take your profit, you took your money, and then tomorrow it does that, you're gonna feel like a moron. I understand, but you're not losing money. You just left some money on the table. Okay, it happens, but that's gonna happen a lot in this game. Make sense? My target was 365. Should have locked something in at 340. Okay. 340. What was that? Was that 340? Okay. I mean, I show the high of 333.66. That's what I'm showing today. Unless you bought it at another time. I'm not sure. But all right, so hopefully that gives you some perspective. I just think it's wise to take something off the table. And if it runs away without you, whatever, or you're still in some of it, great, you still have some. But if it goes back to break even, it's tricky. You could buy up to the 21. Well, you got to be careful with the moving averages. Okay, you have to be careful with those moving averages. But all right. So anyway, I hope you found that helpful. Just remember, like in general, the coins, there's a lot of bullishness going on, but they're vulnerable, right? They're vulnerable. So I think it's wise to take something off the table. If you had bought this thing and Bitcoin was coming off of a major low or something, I would be like, hold on to this thing, man. Just hold on. But we don't have that situation. Oh, okay, 330. Okay, so that was basically just near the high there today. Right, but look, you're never going to sell the top, whatever. And theoretically, this thing should have gone further. I mean, when I saw Bitcoin yesterday overnight at 122, after I wrote my report, I'm like, damn, I never get the timing right. I said like this week it should break 120, and it like in the next couple hours it breaks it. And I thought, that momentum should have continued. So the fact that it gave it back is generally not a good sign. So I think by taking something off the table, you're doing a wise thing. If Bitcoin closed strong, I would say give it a chance. Okay, do you see that? Like, I want you to understand the thought process behind that. But Bitcoin closed weak, and that puts these things into question. So if you have a profit, I think it's just wiser to basically reduce risk. Okay. All right, you guys. So I was talking a lot today. You guys can go back and watch the beginning of the stream. I covered Bitcoin in great detail. I also complained about a lot of things, especially fake gurus and stuff like that. I like to do that. So you may find that entertaining. All right, you guys. So again, I'm not streaming on Wednesday. I've been taking it easy this month with that, and just letting you know. So again, I do this on Mondays at 3 p.m. around 3 p.m. Eastern. I'm sorry I faked a bunch of people out earlier today. I thought I wasn't going to be able to get to it until 3:30. Then I managed to get back on my regular time. So I apologize for faking you guys out. All right. So anyway, okay, guys. So thanks. I appreciate that, guys. Thanks for watching. I hope you learned something today. I hope you got value out of this stream. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.